Are you scared as a real estate CEO of what could happen if rates are not cut?
Actually, no, and I'll explain why. We've already seen a Fed reversal from a year ago when all the talk and momentum was about rising interest rates and the Fed having to be aggressive against inflation, which we thought was overdone, and the markets also thought was overdone in the fourth quarter. And a big reversal has already brought down the 10-year Treasury yield to around 2%. That shift has gone from becoming a headwind last year to a tailwind. It takes a few months for the markets to absorb all this, but the Fed is now so accommodative in terms of messaging that they are going to be facilitating the life of this expansion and not becoming a headwind to it, that the real estate markets are responding very favorably. And of course, the lower rates really helps lubricate the market.
I mean, real estate investment trusts as a sector have done remarkably well.
That's the reversal from last year.
Technology has obviously been far and away the best performer, but you look up there, you see what typically some call a defensive sector, a yield play in real estate doing really well.
Right.
What's the runway like at this point? I mean, people would say that the valuations have become very stretched over the course of the past 8 or 9 years.
Sure, and that's a normal reaction. In a lower interest rate environment, REITs are going to perform much better than a rising interest rate environment. That's the first shift from a year ago. But most importantly, we have to remember that we're not overbuilding commercial real estate. Office space, for example, has been adding about a third to a half of new product compared to the prior peak of the cycle. If you look at retail space, in reaction to what's happened with e-commerce, the volume of new stores being built or malls being built or any kind of retail being built is less than a third of what it was for year after year prior to the last recession. Same thing with every other segment of commercial real estate. That lack of overbuilding, plus an economy that's adding over 2 million jobs a year consistently in a low interest rate environment, all spells a pretty good outlook for commercial real estate.
You noted right now the strength of the economy, where there is strength overall. Are there particular sectors or parts or industries within commercial real estate that you think are poised to outperform? You mentioned e-commerce. Is it warehouse space? Is that the place where we should all be investing right now?
Ironically, the e-commerce effect has been very tough on retail, traditional retail, which is reinventing, by the way, and having a rebirth. But it's been a boost to distribution and warehousing space. That's why industrial is one of the favorite sectors now, if not the favorite sector. You were talking earlier about FANG companies and those tech leaders. Those 5 companies combined have consumed over 14 million square feet of new office space just in the last 12 months. So technology, while creating some downside to the traditional real estate, brick and mortar real estate in some ways, it's creating new demand for office space, for warehouse space. And all these tech companies in the major tech-oriented metros also need workers who need housing. So the apartment market in places like Portland, Oregon, Seattle, the Bay Area, Denver, Austin, and many other markets have really been boosted by demand for the rental market.